Good morning and welcome to the area Securities Markets Update. Beginning with the U.S. figures that were released yesterday, the wholesale inventory increased by 0.5% in May, while it had been anticipated to rise or to increase by 0.6% after a sharp increase in April by 1%. And as a result of this number, yesterday, some of major banks has lowered the U.S. GDP projections for the second quarter of this year to 3.2 instead of 3.3, while some other major European banks also lowered the GDP estimates in half to 2.5% instead of 4 and above. However, we maintain our negative outlook for the second quarter of this year, while the US dollar rally is likely to remain limited. As for today, there are lack of fundamentals across the day during the Asian, European, and the U.S. sessions. Beginning with Asia, we had two figures from New Zealand and Australia, which had also a muted impact on the markets. In New Zealand, food price index increased by 1.4% in June, comparing to a rise of 0.6% in May, and this is also the third monthly increase in a row. In Australia, home loans showed no growth in May after a decline of 0.2% in April, while it had been anticipated to decline by 0.6%. Aussie and Kiwi also continued to trade within a tight range, around 0.9390s in Aussie and 0.8815 in Kiwi so far. As for the European session today, there is only one economic figures will be released from Germany, while lack of fundamentals seen across the day ahead of the weekend. German final CPI is said to be affirmed at 0.3% in June, which is unlikely to have any impact on the markets. As for the U.S. session today, there are no economic release from the U.S., while the Canadian jobs report will be released. Employment change is expected to add around 20.7 thousand new jobs in June, compared to 25.8 thousand in May, while the unemployment rate may remain stable at 7%. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Have a good day and have a good week, and I'll see you next week.